So, 30 years back, 25 years back, foreign banks, the likes of Citi, HSBC, these were the banks who developed consumer credit in Pakistan. Then basically the local banks, local franchises, they caught up and they basically drove them out or whatever. It was a strategic decision for them. So how does, since you represent a bank which is probably the only foreign conventional franchise in the league of Citi and the likes. So how do you your organization and other foreign banks see Pakistani consumer market and retail market from a global lens?
I think globally the trend has changed. So if you look at foreign banks, they are more interested in a high velocity capital light kind of model, right? And when you look at that, then the products we spoke of in the morning, and we are talking about it right now also, is that traditionally you will need to operate in a space where you take the traditional banking products here. And if I talk about the Pakistani market, so a saving account, a current account, they will always be viewed as an entry point into the bank and not the core product. From there, what you really kind of look at is that how many clients do I really convert in an off balance sheet fee income perspective? Can I offer them something which is more let's say mutual funds, insurance, you're talking about bonds, you're talking about capital market products. They work for the clients because in a declining interest rate market, clients now are looking, after I think a period of 3 to 5 years, people now are asking us and saying, okay, I don't want to keep my money here, put 30%, 40% off my income, in alternative products. So I think as long as we have a very good product development from the asset management companies, insurance companies, which I do feel that there is a bit a little lull. So we don't really have, or they have been products to be fair, and we have not really as banks gone ahead and said, okay, can you, let's say for example, do a gold product for me? Can I have like a gold fund? Can I have something that gives me an opportunity to invest in a gold and a silver product, right? So I think product development will be key for clients to kind of like skew towards that.
At a later stage, lending used to happen. But microfinancing has transformed, and again, just to post numbers on the board, we take deposit from corporates and FIs like commercial banks do. There still is no savings product for the microfinance customers. Why is it so?
It's a very good question, Atif. I think critical to understand for the one is what first am I doing over here in a retail banking conference? What is microfinance doing over here? So I was scratching my head in terms of how to address these multiple questions that you're also asking. Key thing to note is microfinance is relative to what retail banking is right now, and you're going one step lower to those segments. They're economic active, they're savers, there's transactory behavior, there's multiple behavior. But the reach is very big in terms of potential.
As the theme of this recent conference says, winning customers. So how do you see retail banks winning customers, and what's the strategy for a winning retail bank for going forward?
So I think products and pricing have been commoditized at whatever point in time you look at it. If you look at it today versus 5 years ago or 10 years ago, the product and pricing environment has evolved, but it's been more or less the same. So I think those have been commodity areas already all along. But if you look at the way the banking industry has evolved, it's not the same. The landscape is not the same. The performance of the banks has clearly not been the same. And why is that? Because the customer service is not commodity. Convenience is not commodity, and innovation is not commodity. And collectively, they all form into customer experience, which has not been commoditized, and that's the differentiator. So I think we're talking about a lot of different things today, and technology clearly is one aspect of it, but we have to continue to invest and differentiate on the basis of customer experience. That's one of the first things that I would say.
Banking nowadays, it's basically not about technology. Banks have done pretty well in terms of digital banking, and it's every bank has an app, and a lot of users are there. Almost 80% of the transactions have transitioned from the counter to digital solutions. But in terms of data security, are we up there? Do we have the systems and do we have robust sort of mechanisms at play which can prevent that, and so that ultimately banks don't incur those liabilities and frauds and all those things?
In today's world, in the previous world, and I've been in banking for about 38 years, we used to talk about, how do we safeguard against, a cyber hack or whatever. The modern guidance, as I understand today, is one day you will get hacked. So are you prepared, and what do you need to do? So do you have ransomware insurance? Do you have, somebody who's a negotiator that is trained to deal with this? So there are certain things that are evolving, and I think it is important for us to do that. I talked about the weakest link. If I look at Pakistan's context, one of the links comes is the maturity of our customers. As the banks tighten up, as the industry tightens up, security layers, scams are the ones that now become more common. So there was a points expiry scam that was there. Somebody made a fake website. Your points are expiring. Enter the details in. The moment you did that, they had control of your account, right? So I think it's also about it. The duty is also there. And I think as PBA and individually as banks, we continue to try and educate our customers in terms of the basic techniques to protect themselves against hackers. But it's a continuous battle.